But joining me now is Howard Yu, Lego Professor of Management and Innovation at IMD Business School. Howard, it's good to see you. So Uber
Great to be
sharing
back.
these mobility revenues for the quarter surpassing delivery revenues for the first time since the start of the pandemic. What kind of indication does that signal as to the future for Uber's business this year?
I mean, the worrisome thing is despite the surging revenue, we see Uber is still making a loss, and primarily because of the investment that they have been making in Grab, in other hot startup, they're all taking a plunge. So there is this investment write-off happening. But I think the broader story is here, is that investors and the financial market are really looking at solid earning going forward. Just because you're sustaining top line growth is no longer enough. And that brings us to the second story you just mentioned, Lyft, because they said they would invest in more driver incentive, the financial market just panic. They don't see this as a sustainable strategy going forward.
So what does this mean for Lyft's business? Obviously, Uber taking it on the chin, but Lyft feeling the pressure even more. We know that there is one key differentiator, Howard, between Lyft and Uber. Lyft is exclusively ride hailing.
I think in 2020, the key phrase that investors and financial markets looking at is business diversification. And in a way that Uber is slightly better than Lyft, but fundamentally, if you're thinking about Lyft or Uber, these are platform businesses. And so in platform businesses, there's always this natural monopoly. There's only one Google search engine, there's only one Twitter, and there's only one Facebook in a sense. So if you're looking at the ride hailing, why we have two competitors? Because investors in the past have been happy throwing money at them. That was a temporary moment. So going forward, it is worrisome. How can a limited market can accommodate two giants at the same time?
Right. So in an after earnings call today, Uber CEO speaking on Lyft's own struggles without mentioning the company by name, saying, quote, you heard, I think, last night, one of our competitors in the U.S. having challenges. We're at least looking to lean into driver supply. Our active drivers in the U.S. and Canada are up 70% on a year-on-year basis in April. And it is because we're bringing new drivers on, not as Uber Rides, but as Uber Eats. And of course, as Uber as a platform and to earn any way, shape, or form on the platform, end quote. What are your thoughts on those comments?
I mean, it's interesting that, Uber is busy distancing itself against its competitor, right? And everything they said is trying to project itself as being future ready. And that I am the old executive these days talking about is we don't know what kind of next crisis is going to unfold. There is so much uncertainty going around, inflation, interest rate, etc. But all they know is they need to build up future capability to buffer themselves against the worst. And this is the Uber positioning, right? They're essentially saying, look, we have no trouble getting drivers in, and we will continue to grow our Uber Eats business. And that is a projection that they have something to build towards in the future using the healthy earning to plow back to the future business.
With a 30% drop in the stock of Lyft, Howard, do you think that Lyft could be a potential takeover target for another company?
That is such a billion-dollar question, right? But one possible outcome you can see, like Lyft has to getting into business diversification. Period. You're looking at the tech sector, right? If you're a one-trick pony, you're doomed. Like Netflix, Spotify, the list go on. And for Lyft, for them to build the online food delivery business on their own is almost impossible. Too expensive, too late by now.
Yeah.
Could be a potential merger with a big online giant. That could be a perfect combination, perhaps.
Well, look, prices certainly up across the board. Howard, any indication that the Fed's policy might impact the future results of both Uber and Lyft, knowing that the Fed is set to aggressively raise rates, even though not perhaps as aggressive as investors had feared?
Yeah, I think that really will trigger a complete change of the market environment. Once our interest rate is set to be higher or the expectation is going to go on the rise, then the cost of borrowing is going to surge. That means that access to cheap capital is over. And if you're taking mobility as a broader sector, right, they don't even make it to our readiness indicator for even auto car makers. Because if you're looking at ride-hailing company, they are really majority of the spending is still buying market share. The core technology is relatively simple compared to Tesla or compared with China BYD. They're in battery, autonomous driving, chipset. That is what investors looking for. They're no longer looking for you to spend money on marketing expenditure, advertisement. Even having algo sleek app is not enough. You need to demonstrate to the market you're investing in deep engineering
Right.
so that they are willing to give you money for those funding.
Okay, so another question is Russia's ongoing invasion of Ukraine clearly driving up gas prices. Car rental companies, different fleets want to add electric vehicles to their own fleet. And certainly, I know for any Uber or Lyft riders, they've probably ridden in an electric vehicle at some point before if they are active riders. But the fact that gas prices are rising, Howard, and this company, both of these companies, certainly not immune to the geopolitical factors driving the overall stock market. What could the impact of a prolonged invasion have on these companies?
Well, we already see the Uber bill has been going higher and higher, right? So my school is at Switzerland, and I also noticed my Uber bill has been going higher. And I think there's a massive passing on price transfer to consumer, which means that when things are on the rising price, consumer is going to scale back in terms of usages. So that becomes quite a worrisome in terms of going forward the revenue guidance. So that would be the short-term effect. Over the long run, as the passenger car continue to move to electrify, perhaps over the long run, the price would come down better. But the big winner here would be the EV makers, not Uber nor Lyft.
All right, Howard, we got to leave it there. Always good to get your take. Great to see you. That's Howard Yu, Lego Professor of Management and Innovation at IMD Business School.